What do I need to know about a profit loss statement so I can have this kind of conversation with you so that you'll be able to comfortably support what I'm trying to do?
Yeah, so ideally, with any kind of profit loss thing, you're trying to evaluate revenue and expense. On the revenue side, if you had some estimates around the volumes that would incur based on this investment, you could project what those costs would be, and you would model in there the different payer percentages that you would see based on which insurance companies. And from that point, you provide this service, it yields this service from a revenue standpoint. On the cost side, obviously, if you have to bring on someone new, you want to add in all those salaries, and typically in any organization, labor is the largest expense in any organization, followed by either supplies or malpractice. So building in all those costs to identify what will sort of essentially be my bottom line, given the fact that it takes a number of years to ramp that service up. If right away we have a backlog and to fill some spot, the ramp up is maybe a year, then I'm sure that the returns on that would be much better. But if it's a new service or a service that right now has a lot of competition in the marketplace, it might take multiple years or longer to ramp up. And you need to essentially have what's called a sensitivity analysis, and that would sort of model it out under multiple perspectives, whether you have a fast ramp up, maybe a medium ramp up, a slower ramp up, but also take into account if the patient population that you're tending to see might have a different payer mix than others. So you want to take into account multiple different factors and therefore understand from a financial standpoint, it might mean this or might mean that. But ideally, not every investment will have a positive return on investment. Obviously, we're doing things to improve quality and safety that just are important to do regardless of the financial benefit of it. So there's multiple things to take into account.
Well, so can I ask you this, and I don't know if there's a real solid answer for this. I can guess what a provider's salary is going to be, right? Mm-hmm. And I over the course of the years, I was told there's something we're going to cover for fringe and overhead.
Right.
Is it a percentage of that? Like how do, because in my head, what I want to be able to, again, I want to have a productive meeting with you to say, Shaun, I want to hire this, and I think it's going to cost this amount. How do I get to, what does that cost?
Sure. So for any type of position that you hire, typically there would be a benchmark salary range for that individual based on either their rank, their tenure, years of experience, and from that you can kind of come up with their base salary. But then every organization has costs associated with those salaries like fringe benefits, and that would include your health, your dental, your retirement type of costs. With that, it can range anywhere between, say, 21, 24%. Some organizations are much higher, but ideally, yeah, that on top of any salary that you would bring into the organization, you'd want to layer on top of that fringe benefits, both for provider as well as staff.
All right, so that would cover the cost part of this, right? How easy or how difficult is it for me to figure out how much did I bring in to this organization? Well,
if you're going to look at any individual from a historical standpoint, if the person is billing under their own provider ID, you can pull data that would show what those reimbursements or those payments are that we receive for that service. And from that, again, it would vary depending on the insurance company, but also depend on the different service that you're providing. So if it's a level 1 visit, obviously it's going to be reimbursed at a different level than a level 4 or 5. So you'd want to model out the types of activities that this individual would see, and then from that you could then project the revenue over a course of a number of years as they ramp up.
All right, so how do we factor in just the changes in healthcare, right? So at some point, a couple of years ago, we had the Affordable Care Act, mm-hmm. and what we saw in my own unit was patients who didn't have insurance now having insurance and coming in, right? And that may change. Sure. There may be more uninsured. So how are we able to overlay a 3 or 4 year projection, right, mm-hmm. with the changing healthcare environment? Like how do you as a finance guy keep that in mind before you say, yes, you can do this, or we have to think about this differently?
Yeah, well ideally, you'd want to start first with your governmental payers, which would be either Medicare or Medicaid. And ideally with Medicare, any type of changes in reimbursement that would be, we'll say, positive, would be very minimal, like 0.5%, 1%. They have very moderate increases. With Medicaid, typically under the traditional Medicaid plans, which was before they got into the Medicaid managed care world, you were really seeing no increases. You were just seeing kind of, we'll call it static payments. However, the challenge on the Medicaid side is that, at least within the state of Illinois, the current fiscal situation of the state, those payments came in extremely slow. So it would be not uncommon for us to see payments 9 months after a service is provided, at a cost that is below, unfortunately, what it actually costs us to provide the service. So if you start with Medicare and Medicaid, that would represent maybe up to 50% of the activity that you would see, again, depending on the service. But then on the other side, on the managed care side, ideally, we would model it out based on reimbursement rates that are higher than Medicare and Medicaid. And typically there's a range that we would like to get to, but it would be some multiple of Medicare.
Okay. So here's one of the mistakes I've made a couple of times in my career here, right? I have a great idea and we need to get either some new equipment or I want to hire someone new. And what I'm familiar with is the educational graduation cycle, right? So at the end of June, doctors finish their residency programs and it becomes very easy to find a pool of applicants that will come and join us July 1st or shortly thereafter, right? As we backtrack that, I really need to know, what's our ability to hire. I mean, really, October, right? October,
sure.
November would be great. If you wait too long, then the good candidates actually job somewhere else.